Intuitive Machines. This might be one of the most undervalued space plays in the market right now, because this Houston-based company has quietly become NASA's go-to partner for lunar infrastructure. We're talking about a company that just landed a potential $4.82 billion 10-year contract with NASA for their Near Space Network services. Yep, you heard that right. Nearly $5 billion to provide communications and navigation services for missions to and around the moon. The contract runs through 2029 with an option to extend until 2034, which gives LUNR incredible revenue visibility for the next decade. But here's what makes this even more interesting. Because they're not just a one-trick pony. LUNR holds 3 separate NASA contracts under the Commercial Lunar Payload Services program. They're developing lunar terrain vehicles for the Artemis program, and they just received another $2.5 million study contract for lunar logistics and mobility solutions. This is huge. I mean, it means that they're already integrated into NASA's long-term lunar strategy. Their Nova C lunar lander has actually touched down on the moon, making them one of the few commercial companies to successfully complete lunar missions. Yeah, the IM-2 mission landed on its side, but it still delivered data and proved their technology works. That's more than most space companies can say. Additionally to these news, we've got a textbook short squeeze setup that most people haven't noticed yet. Short interest is sitting at 21.66 million shares, which represents about 20.40% of the float. That's massive. Anything over 15% starts getting into serious squeeze territory. The days to cover ratio is 3.18 days, which means if positive news hits and shorts start covering, it could take them over 3 days at normal volume to close their positions. That creates a feedback loop where covering drives the price higher, forcing more shorts to cover. What makes this setup even more compelling is the institutional activity. Over the past 24 months, institutional investors have bought 18.5 million shares worth about $228 million. That's smart money betting on Lunar's long-term prospects, while retail shorts are betting against them. You've got this perfect storm where institutions are accumulating, shorts are heavily positioned, and there are multiple catalysts coming up that could trigger a squeeze. The space sector is known for explosive moves when companies hit major milestones, and Lunar has several shots on goal with their upcoming missions. If the IM-3 mission scheduled for late 2025 goes well, or if they announce another major NASA contract, those shorts could get squeezed hard. The stock has a beta of 2.53, which means it moves over twice as much as the broader market. When space stocks run, they really run, and Lunar's setup looks primed for exactly that kind of move. The catalyst pipeline for Lunar is absolutely loaded, and that's what makes this such an interesting speculative play. The IM-3 mission launching later this year is huge. It's carrying 4 NASA science payloads to the Reiner Gamma region of the moon via SpaceX Falcon 9. Success here would validate their technology after the mixed results of IM-2 and could unlock additional NASA contracts. Then you've got IM-4, scheduled for 2027, which includes 2 lunar data relay satellites that are critical for NASA's Near Space Network. These aren't just science experiments, they're infrastructure that enables everything else NASA wants to do on the moon. The lunar terrain vehicle development for Artemis is another major opportunity. NASA delayed Artemis 2 and 3 to 2027, but that actually gives Lunar more time to perfect their technology and be ready when human lunar missions resume. What I find particularly compelling is how all these pieces fit together. The communications network, the landers, the rovers, Lunar is building the entire ecosystem that makes sustained lunar operations possible. They're not just trying to win one contract, they're positioning themselves as the primary commercial partner for NASA's lunar ambitions. The space economy is projected to be worth over $400 billion by 2030, and lunar operations are expected to be a major growth driver. Let's be honest about what you're getting into with LUNR. This is not a boring dividend stock. The volatility is intense, with implied volatility on calls hitting over 90% recently. When space missions fail, these stocks can drop 70% in a day, which happened to Lunar after the IM-2 landing issues. But when they succeed, the upside can be explosive. That's the nature of the space sector. High risk, high reward. And you need to have the stomach for massive swings. What gives me confidence in Lunar's long-term prospects is the contract backlog and NASA relationship. This isn't a company burning cash hoping to figure out a business model. They have $4.82 billion in potential revenue locked up, plus multiple other contracts providing cash flow. The space economy is real, it's growing, and governments are spending serious money on lunar infrastructure. Lunar has positioned themselves as a critical piece of that infrastructure. The institutional buying suggests smart money sees the same opportunity. About 27.72% of shares are held by institutions, which provides some stability and validates the investment thesis. These aren't day traders, they're long-term investors betting on the space economy and Lunar's role in it. The short squeeze potential is just the cherry on top. So, if you found this analysis helpful and want more coverage of emerging space and technology companies, make sure to hit that like button and subscribe to the channel. But remember, everything I've shared here is just my opinion and analysis. This is not financial advice. Space stocks are particularly volatile and speculative, so always do your own research and never invest more than you can afford to lose. See you in the next one.